performers today. Before we get to that, Julia Lee, what did you make of the session?
James, it stays like this. I wonder why I got out of bed. And first of all, I'd like to mention the volumes on the market. I mean, all week the volumes have been absolutely very, very low. I mean, in the month of June, we saw the ASX numbers out yesterday, and the average was $5.3 billion worth of turnover a day. Now, that wasn't much on the previous year. In fact, we didn't see much growth in terms of cash volumes, and all the growth seems to be in derivatives, as options as well as futures, and today's market really reflecting that. In fact, if we have a look at the amount traded today, coming in at just $4 billion, I mean, that would be light volumes even for a Monday, but here we are at Thursday with hardly anything happening on the market. Having said that, there were really two big events which impacted on the market. First of all, we did see the Australian market coming under pressure earlier on because of China's rate hike. It's the third that we've seen this year, but this rate hike, the rise in interest rates in China is probably coming to an end. Most analysts are seeing inflation peaking in the month of June. But of course, the losses on the Australian market soon turned around once we got the job numbers out for June, and those numbers were better than expected. So that saw a bit of a turnaround on the Aussie share market. But all up, if we have a look at the market, some strength in the industrial sector, the healthcare sector, as well as the property sector. So no strong trends on the Aussie share market, and extremely light volumes for a Thursday.
Kieran, I'll come back on the subject.
I guess we've been talking about volumes, and there seems to be some sort of undercurrent, according to Kieran and Michael, on the market. And while I agree that we are seeing some stocks performing well, I mean, gold stocks have been one in the last couple of sessions where we have seen some key technical barriers being broken and some strong support for stocks like Newcrest Mining. If we did see professional investors active in the market, fund managers active in the market, that would be reflected in volumes, because it is those professional investors which move market volumes, not the retail investors. So the fact we're only seeing $4 billion traded despite some big price moves in terms of gold stocks really reflects that there's not much activity in the market. And I guess that's the key here, that while we are seeing some stocks moving, we see that every day, but altogether, if we have a look at volumes, I think that is a key in this market. And one of the things that a lot of investors and investors are worried about is global growth. And if you have a look at the three areas that investors are looking at the moment, it's China, the US, as well as Europe. And if we have a look at China, where we've seen a rate hike in the last 24 hours, if we have a look at Europe, despite the problems in Greece, the ECB is talking about a rate hike. It's only the second in 3 years that we've seen one there. And if we have a look at the US, we know that the jobs number is key, and the last job numbers was absolutely dismal, with a number of 54,000. Now, this one's expected to be better, but I guess the market was also watching that services ISM number overnight, and that was important because the US is still a service economy. 70% of its economy is based on the service industry, and if we have a look at that ISM number for the service industry, it came in below expectations, showing a slowing down, and this is highly correlated with the jobs number, which is out tomorrow. So I think the key is going to be US jobs tomorrow. The ECB tonight looks like they're going to raise interest rates, and we've seen an interest rate hike by China as well.
See some buying and selling today. Julia Lee, Virgin Blue, I suppose it was one of the big movers today. Qantas, I suppose, to a lesser extent, they seem to be getting a little bit of kick along because of all of Tiger's issues.
When you see one of your competitors knocked out of the field, it's really good news in terms of market share, and that's really what we've seen in the place of Tiger. If we have a look at Tiger, it won't be flying until at least the 1st of August now, so it does look like an end temporarily, at least, to the price wars that have been happening in the airline industry. We know that Tiger has come in with a very low-cost airfare, and now that it isn't selling airfares and it isn't flying, what we're probably going to see is a bit more pricing power for both Virgin and Qantas. It'll be easier for them to put fares up and to get more revenue, as well as greater margins coming through for their business. So overall, a positive, despite whatever decision comes from the Civil Aviation Safety Authority, whether it's a positive or negative. The damage has very much been done to Tiger's brand in terms of safety. So I guess regardless of the decision, a positive for both Qantas as well as Virgin. We did see Virgin shares up by more than 9% today, and it's seen as a key beneficiary because of its alliance with Singapore Airlines. Singapore Airlines owns 1/3 of Tiger Airways, and I guess if any sort of deal was supposed to be struck, I guess Virgin would be seen as a key beneficiary. And of course, Qantas is still facing some protests from its union, so some union strikes there would be negative for Qantas. Qantas up by 0.5%, but Virgin shares absolutely soaring today, up by more than 9%.